Hi everyone, welcome to Trader Support Club in this month's free market commentary. In this month's commentary, I'm going to split it into two parts. I want to look at the main markets that we often review, which is the Dow, the S&P, the US markets, and then we'll take a look at pound versus dollar and get an update on that. Then what I'm going to do is look at several markets that have similarities to it and see if we can tie in a bit of analysis and teaching at the same time. Now, if we take a look at the Dow, what we've had in the last month is we got that sell-off towards the end of the month in August, and since then we've rallied, and you'll notice that we're now back at those highs. And I've been watching to see what sort of reaction do we get if we reach here. Now, the longer it takes any selling to come into the market, so for instance, the last time we were here, we were showing signs of selling. We had a large engulfing day here. We did stall a little bit, and then we came down. Up until this day today, which is now the 1st of September, although we've hit this area again, there's no kind of clear candles expressing a strong bearish bias. So it's starting to look like what we could have is what's called accumulation, which is where people are buying up small amounts, the funds buy up small amounts and without really moving the market. And then we then get the breakout. So what I'll be looking to see for the month of September is, do we continue this move higher now that we've stalled? So two options would be take a breakout long, or alternatively to go long but then the pullback. Or alternatively in the short term, so obviously breakout then a pullback continuation. The other option would be, is there any sort of bearish signal that we get? Because if we start to break down below that little consolidation we'll be getting, that's what might then present some short opportunities. Now we still have a major challenge when it comes to the US indices, specifically the Dow and the S&P. This does not apply to the Nasdaq. The Dow and the S&P are both at ultimate highs. They've never been here before, so what we don't have is historical price support or resistance we can be using as forms of targets and areas to trade from. So if we're going to trade these markets, we've got to consider alternative targets. Now you'll see I've got pivots on my screen there. That's one option. If I'm a breakout trader, a pullback trader, I can look for the pullback and then play it back to the short-term high. And then obviously with the breakout trade, one way you can do it is by going the distance of the box. But it's just something to consider as well when you're looking at it. But while we're still showing, or not showing, any selling bias on the Dow, it's starting to give clues that we might actually see it push higher. Now, typically September and October can be quite good months as far as movement goes. So it'll be interesting to see, because we're just come through now the summer months, July and August, where it has just naturally been quieter, as it often is. So it's good that we're coming into September and hopefully we'll see some movement. Just to cap on the S&P as well, you'll notice the S&P has gone that little bit higher than its high. My personal opinion about that is the reason it went up that little bit higher is because the Dow at this point hadn't hit its highs, and I think that's why it wanted a little bit more first, but it's doing a very similar pattern. So what I'll be looking for is, potentially in the coming days we could look for the breakout or the pullback to go long, or alternatively, if it starts to show some bearish action, start to look short. So it's in a really good area at the moment, and certainly one that you want to be paying attention to. If we go into pound versus dollar, that's a really interesting one, and it's quite a strong sell-off between July and August, sort of midway through July and the whole of August. And you'll just see we're starting to see a little bit of upside. We're a little bit no man's land at the moment, but because we've now completely broken the original uptrend, now there's a couple of trends that I had, trend lines that I had, that you'll have seen from previous commentaries. I've got this one here, and then I can maybe take a steeper one by coming up here. So regardless of what's happened, we've now broken these. The other thing as well is we have now made lows, because we've broken this level here and we've broken this minor here, this minor area here. So what I would be looking to establish is that, does that now mean that potentially pound versus dollar is going into a downtrend? So the bias would definitely be short at the moment. The only concern we have, and this is what we need to be careful about, is because it's done such a big move in a short period of time, and it's not really pulled back on its way down, it's had small pauses, it's just making sure you don't go in too early. I want to see this one prove itself before I'll consider a short. So either to get a move up in within the next few days, because otherwise there's no momentum. Or alternatively, if it consolidates for maybe a week or two, then I could look for the potential short, and I know that it is less likely of running out of momentum on that basis. So we just need to see this prove itself a little bit, but I'm certainly more bearish at the moment. If it obviously comes back up and starts to break some of these levels, so what we've got is this resistance area here, and then this one up around about here. If we start to break those levels, then I would say the market's more sideways, and then I would be more inclined to stay out of it. So we'll see what happens in this month. Now, the last point, what I want to cover just to finish off for this month's free commentary is markets that are showing nothing. Might seem a bit odd, but I've got a watch list of 35 markets approximately, and I can quickly scan through them and see there's nothing in them. But what's interesting is I've got a few markets where there's nothing in them, but they're starting to catch my eye because of how long they've been showing nothing. So I'm just going to quickly scan through a few, and I want you to see, can you notice the similarity between them? Okay, so first one is Aussie versus CAD. Okay, next one is Aussie versus Singapore dollar. Next one is Aussie versus dollar, American dollar. Next one is the Swiss franc versus the Japanese yen. Next one is pound versus Australian dollar. Next one is pound versus Canadian dollar. Then we have pound versus Japanese yen. We have New Zealand dollar versus Japanese yen. And lastly, we'll have American dollar versus Japanese yen. Now what I want to ask you is, from just going through that, and I try not to go through it too quickly, was there anything you noticed about all those markets? Now obviously I'm going to give you the answer because you can't actually reply to me on this video. All of these markets have been in a sideways move for many months now, some much longer than others. So for instance, dollar yen hasn't really been trending since the big move up that finished in December of last year. So in some respects it's not far off being a full year where it's done absolutely nothing or been quite volatile. New Zealand dollar yen, that's been since about April. We can see we've got a large consolidation going on here. I'll just show you that. So all of these markets are showing forms of consolidation. Now, that means the minute I see that, I'm not really interested because I don't want to trade within the consolidation. However, there's a few of them that are starting to show signs of potential opportunities. Now, it might not be in this coming month, but they're now getting interesting because they've been consolidating for quite some time. And at some point they will break. It will happen. And it's making sure we don't switch off from markets that are in that condition and miss the opportunity. Now, how would you do that? Well, one of the things that I would often recommend is that you simply set alerts through your charting software so you know if it hits there, and that way you can switch off a little bit, but you know you'll have an alert to pay attention when it hits the highs or the lows of the consolidation area. That's when you obviously would then bring strategy in, do your analysis, and take it forward from there. But we can see that if, for instance, I go back to Aussie CAD's still quite a mess. It's tried to trend down, but I know that if it comes back up to these highs here, which we have at about 10,340, then I'm going to be interested in possible opportunities because it's been on the go for that, like that for months. Aussie dollar, we can see we've had an initial little fake out of that consolidation in July, and then it settled back into it. But again, we've been doing it for so long now. If we reach these highs or these lows, I'm going to be really interested to see, one, what happens when we get there, and two, what opportunities that I might be able to trade from that. Another one would be, for instance, Swissy yen. Now, Swissy yen is one that I had traded a few of the yen pairs earlier in the year, and I've not traded them since, and we can see that this is almost a two-part consolidation in the fact that after this big move up here, we then did the pullback, pushed higher, but it wasn't really trending at that point, if I get rid of my lines. And then it's kind of come down and settled into a subsequent consolidation. So the easiest thing to do is look at this market and go, do you know what, it looks like a mess, I wouldn't touch it. But what's important is, if you look at some of the moves we've had, we could quickly get to one of these areas within a matter of a day, 2, 3 days, and all of a sudden we need to be paying attention to it. So the reason I wanted to highlight this is there's a few of them that I think are getting close to or won't take that much to come into these areas, and because it's been going on for so long, there's a good potential that that build up means that these markets could go from being absolutely nothing for us to lots and lots of potential. So I would keep an eye on them, and it's also a good reminder that even although a market might look rubbish and not tradable today, that can quickly change even as a swing trader. So it's important to keep paying attention to your markets and setting alerts. So that's us for this month's free market commentary. Thanks for watching, and I'll see you in the next one. Bye for now.